I remember when I lost my mind. There was something so crazy about that day. What's going on, guys? No camera. Camera is shit anyways, and it's very dark in my room because I have a splitting fucking headache, so you can't see me anyways. Missed the whole day. Woke up this morning with a migraine and had no choice but to go back to bed. I couldn't even open my eyes. I thought I had a brain tumor for a second, but that's probably not the case. I think I was just dehydrated. Combination of cough medicine and coffee yesterday. So if you hear me coughing, I apologize. I'm going to try to eliminate that as much as I can. I was supposed to upload a video this morning before open, but for the reasons that I just described, I was unable to do so. And I'm a bit of a procrastinator because I could have easily done it last night while I was charting, while I was doing some technical analysis. But when I'm lost in the sauce, when I'm like in the zone doing TA, I have a million different thoughts flying through my head at 1,000 miles per second, and I really have to, like, once I'm done with an idea or like one particular part of it, I really have to sit there for a second after and evaluate my ideas or my thoughts or the conclusions that I just that I just made from what I was looking at. And I really try to dissect it and make sure that it is actually logical and it's not just confirmation bias. So that's why I didn't record last night. I actually made a post in my Discord server in the general chat. If you saw that, it's pretty much what I'm going to talk about, along with a couple other things. See, this is no good. Let me take a sip of water. Yeah, I made the post in Discord. One, so I could read it while I make this video, because I organize all my thoughts better if I'm typing. I'm fine with speaking. I have no problem getting my ideas across, but I'm just the type of person that I can get that idea across faster to you if I'm typing. I feel like Stephen Hawking. I'm fucking retarded. So what I'm gonna do is show you a blank chart of SPY for starters. Get rid of everything. And it's really simple shit. But I'm gonna read you what I posted in Discord first, and then I'm gonna walk you through the actual technical analysis of what I wrote. Where's that fucking trend? Okay. So for the purpose of clearing my own head and having what's a good way to put it? I guess I should start with just reading the post because I cover it all. So I wrote, I started with a clean slate on a SPY chart, with my focus being only on 2020 to present day. I understand that when I am throwing out levels derived from the extensions of two separate market events, that it can become quite confusing. I don't think it is hard to recognize the significance of what occurred in the markets post-COVID. We all know what happened in the market. The printer went burr, and they just created, I apologize, and they just created a ton of debt, propped the economy up, and the market went boom boom. So let us imagine for a moment that our price action from then until now is a singular impulse reaction, and let it be the only one in history that we consider relevant for the sake of understanding the fundamentals of my approach that I use across all equities, any ticker. Make no mistake, though, that this is not the case. The market is a continuous realm of action and reaction that compounds onto itself, and it has done this since its inception. That is where it gets a bit confusing, because the relationships between all market events throughout history are intimated, and I am constantly trying to identify those relationships through the Fibonacci sequence and the golden ratio. This will only become more understandable to you and myself as we learn and experience the market firsthand during all of our trading journeys. Anyways, again, I did this to refresh and consolidate my vision of current price action a bit before the coming weeks and months, but to also demonstrate the simplicity of what only appears complex. This analysis consists of one market event, the COVID crash, its price levels, two patterns that everyone should be familiar with, especially if they follow me, because I reference them all the time. Handful of trend lines, and your logical imagination as a trader and a technical analyst. Now, what do I mean by logical imagination? This game is about speculation. So I'm sure we've all seen a chart and it has this crazy fucking drawing on it, or just something ridiculous. Some ridiculous prediction is being made by the person that posted the chart, and you look at it and it looks like a toddler was handed crayons at a Pizza Hut, and they're drawing on their little picture that they get, their placemat. And it just makes no sense. Well, I can't say it doesn't make any sense, because maybe it makes sense to that person. All right, I'm not trying to knock anyone here, but if your speculation is not logical, I don't think it's very valid. Like, what's a logical speculative prediction? Or I guess that's not what I'm trying to say. If you're just pulling patterns and trends out of your ass, and like trend lines are very like sloppy, like they're not true in trend, you're kind of crossing like the middle of the price action. You're approaching your technical analysis to make it fit to your bias, rather than being very precise with how you plot things and how you identify patterns, and allowing the chart to show you whether or not your bias is valid. That's what I mean. And I don't think you have to be a 25-year trading veteran or a chartist to see a chart and determine whether or not it's logical. So hopefully you understand. I call this the KISS method. This is the keep it simple stupid method. These are the keep it simple stupid steps that I used in this approach. Step one was identify any major pattern or patterns that you can confirm have been completed and ones that are potentially developing. That's where logic comes back in, to remain logical. Identify the macro trends using the extended trend line technique, or what I nicknamed the Charlotte's Web technique. Shout out Astro. To emphasize the importance of the origin of price action. Step 3, find the macro levels of the crash of 2020. Step 4, find the micro levels between the golden ratio extensions and the levels between the 1 and the 1.618 extension. So the 1 being the high of 2020. Dissect the patterns you identified in step 1 and validate or invalidate your assumptions based on the observations made during all of the steps. Use different time frames and be surgical. So that's what we're going to do. That's what we did. That's what we've always done. Very simple. Um, and the beautiful thing about charting price action is, and really anything in life, if it's beautiful, if it looks pretty, a lot of the times it's correct. The geometry of the market is beautiful, and when things look right, a lot of the times it's right. But when charts look messy in art and anything really, when things are ugly, they're probably not right. You know, if you put a puzzle together and you're trying to jam a piece in the wrong spot, you might get it in, but it's gonna look, even from a distance, it's gonna look off. So we're just gonna go through all those 5 steps. I do it really quickly because I do this a lot, and then we'll talk a little bit more. So step 1, identify any major pattern or patterns that you can confirm have been completed and ones that are potentially developing. So if we're on the daily, right? So I'll label this for you folks. COVID, right? High, low. High of 2020. Low in March. So that's what we're looking at. This is what we're imagining is the only relevant price action, even though it isn't, to what we are trying to achieve, which is a clearer vision of where price action might go. So right off the bat, I'm going to identify a head and shoulders pattern, and one might say, that's not a head and shoulders, but I think it is. And if we want to talk about how head and shoulders patterns break down, how they form, and what happens after they are done forming, which is a continuation of the downtrend, I believe that the assumption that this could be considered a head and shoulders formation is valid, right? So, and it'll become clear. I already have all these plotted, but I'm just going to show you again. You know what? I'm going to save time. Excuse me. All right, so that's what I'm saying is a head and shoulders. So you have the low of COVID. You have the left shoulder form. Boom. Head form, high of 2022. Or 2021. No, January 2022. Breakdown. Neckline forms, right? So, again, I'm on the daily. But these head and shoulders patterns that are available on TradingView that you can just draw, they'll set you up with the neckline and extend that bitch right. So it's a nice trend. And if you notice here immediately, then the descending neckline from this head and shoulders pattern that we are identifying is being retested and regained here. So that's beautiful. That's one observation that I made immediately. Now, what is this? What is all this? So, rule of thumb. Whoop, what did I do? What the fuck? Head and shoulders formations have a continuation of the breakdown once the neckline is broken. It's how they react or how they act, and that's exactly what we got. And what I always look for, and what I believe to be true, is a lot of the times the continuation of the breakdown in a head and shoulders formation will turn into, or potentially turn into, an inverse head and shoulders pattern off that lower low that's created. So in this case, I imagine an inverse head and shoulders forming off the continuation of the downtrend. So right shoulder forms, you break down, below neckline, lower low created. Now this lower low, which was the low that we experienced in June of 2022, this year, that would be the left shoulder of the inverse head and shoulders forming. And you bounce back, you create the head. When we drop to like 348 or whatever it was back in October, you bounce back, you test the same uptrend. Now this trend here, this is the trend line that everyone's been drawing, right? So it's just from here to here and extended right. That's like the trend line of all trend lines. The two-line Tony is that just draw two lines on the chart and think that's all that matters. But it is an important trend line nonetheless. If we break that, that's excellent. So this inverse head and shoulders pattern, auto neckline, provides us essentially the same trend at the double top. And like I said, we are bouncing above the descending neckline from the head and shoulders formation, right? So if this were to break here, it would likely retest, 360s, or at least the bottom of the left shoulder, but it's not. All right, we're back above the neckline. We had a scare yesterday. We broke down below it violently, but like I said, look at this 30-minute. We're back above the descending neckline of the head and shoulders formation that we're working with. So those are the two patterns that I identified in step one. And it's pretty cool. It actually creates this like descending triangle, I guess it would be, or a wedge. Whatever you want to, whatever floats your boat here. It's looking healthy. In my contrarian opinion, I know I'm going against pretty much everyone. It's like dooming it up, doomsday every day. So yeah, that's step one. We have a head and shoulders into an inverse head and shoulders. Now this is hypothetical. So let's go into step two. Identify the macro trends using the extended trend line technique to emphasize the importance of origin of price. What do I mean by that? I'll show you. We're just going to clean the chart up so you understand the head and shoulders and inverse head and shoulders idea here. So extended trend line technique, what I mean by that is rather than plotting a trend line like this, so you start here and you manually drag it up to here or here, and you're like, okay, that looks okay. Or, you want to just sloppily do this. Yeah, that looks fine. Fine, whatever. But what I prefer to do is allow the trend to do the work for me. So I toggle extend line right if I'm working from left to right. And what I do is I find two relevant tops or two relevant lows and extend the line right or extend the line left if I'm trying to identify like origin of price action, or the idea that the reaction from price action in the past has created this price action that we're seeing now, or it is a continuation of itself. It's one entity. So we'll do that really quickly. So first things first, as we saw on the head and shoulders formation that I showed you, we already had the trend, but I'm just gonna do it again. So I'm plotting from all-time high to the next test, or the next created high. So that recovery back in March of 2022 after we dropped to like 418. And then it's extended right, okay? So that's how I am drawing the trends. I'm allowing the the trend line to do the work for me, and I'm basically saying that these 2 points of origin, their continuation of the trend will remain relevant or is valid in the future. And you did get that retest here when you shot up to like 413 or whatever it was on the CPI print. All right, so that's the extended trend line technique that I'm talking about, and it's really awesome because you can also identify like little micro patterns. So something I might want to do is plot from the low of October 13th on Thursday, 348.11, to the low of Friday the 17th in June, right? So the peak of the inverse head and shoulders, the left shoulder and the head, and then extend that left, right? So what that does is it lets us imagine a continuation of price action being relevant here from this point of origin, right? And if you are in the camp of patterns repeating and compounding on itself, and on the macro can be broken down into the micro patterns and vice versa, then this is a really cool trick to help you visualize that. So for now, we have no price levels being found from Fibonacci. That's in step 4, I believe. But let's just continue doing this. So we're going to just highlight this area here and see if that ends up being significant for any reason. So we have this extended left, the daddy of all trends extended right, and we'll do a couple more. So we'll go from the low to the most recent low in October. Because this hasn't been retested yet or breached, we can consider this to be the local bottom. So bottom from COVID to the most recent lowest low. And that will serve as our continuing uptrend until it is broken. It's logical because it has not been broken yet. So extended right, and we have a nice continuation of an uptrend that we can work with in the future. And we'll do a couple more. So just for the hell of it, we're going to go from high of 2020 to this little peak here, this breakout point, or the retest before the breakout point after COVID, an extended right. So what do we notice here? It doesn't show us any sign of significance or any notion that the continuing trend was important in the future. Well, very quickly we can notice that this trend line, or this extended trend from these 2 plot points extended right, the continuing trend served as a beautiful bounce point back in March of 2022. I'm sure people were saying sub 400. So actually, in fact, I know they were. People were calling for sub 400 or 400 SPY back in March. What did you get? A beautiful bounce. So that trend line remains valid. That extended continuing trend remains valid here. And it also remains valid once you break down after retesting the daddy of all downtrends. And it doesn't remain relevant just once or twice. I'm on the daily, but the intraday trading here must have been insane, interacting with this continuation of the trend from back then. So it was a retest and rejection point as well as a support level. So that's pretty cool. That helps us visualize the continuation or the importance of origin of price action, if you will. And that's pretty much it as far as extended trends when I'm working with this area of price action. But I do want to just add one more, and it's going to be the little double bottom, this George W here, the low to low and extended right. And we're going to extend that right, and we'll see if that remains relevant. So, we look, was a significant bounce point on the peak of the left shoulder on the inverse head and shoulders that I described to you in step 1, the hypothetical one at least, and it is serving as a bit of resistance here during the formation of the hypothetical peak of the right shoulder. So, what can we infer about that? I don't know, but you understand what I'm saying, right? So all of these trends have just been extended left or right, depending on what we're looking for, and we'll just leave it as is and go into step 3, was it? Step 3. Okay. So hopefully you understand the purpose of drawing trends in that fashion, rather than sloppily drawing it from point A to point B yourself, and then just dragging to extend. Just hit the extend line left or right button, please. And stop drawing sloppy trends, because it's fucking ridiculous. Be a surgeon. Be surgical. Why wouldn't you want to be as accurate as possible? Wick to wick. Cover all price action from highest high to lowest low. And allow that price action that you're analyzing to do the work for you. Just extend it right or left. I swear to God. Sometimes it gives me a fucking headache watching people draw trend lines and looking at their trend line and be like, why is it crossing the body of 10 candles? Why? How does that transfer over to the 5-minute if you're drawing on the 1 day? I mean, look how nicely that extended trend is on that beautiful retest where we broke down. Like, let's go to the 1 month. Obviously, what I just said is happening here. Like, the trend line is going through 10 different fucking candles. But it's because it's extended right or extended left. And, yeah, you get what I'm fucking saying, alright? I'm going on to step 3. We're going to the Fibonacci levels. I'm losing my mind here. Trying not to cough along out. You're picking up what I'm putting down, though. So I'm going to eliminate all these trends. Just hide them because you get the gist. And we're going to move on to step 3. Which is step 3, find the macro levels of the crash of 2020. Now, what does that mean? We're going to pull up the retracement for the COVID crash, or the extension. It's still a retracement, but since we're finding the extensions, that's what it's going to be, right? So high of 2020 to low of COVID. We'll plot the 0 and the 1, so we understand where we're coming from, and then the 1.618. And we'll do the 2.618 as well, even though it's undiscovered price action. But the micros between the 2 and the 1 will still be relevant to us. So this is your retracement, or Fibonacci. I'm not even going to say the word retracement anymore. I'm just going to refer to it as Fibonacci. These are your Fibonacci levels for the crash of 2020, or the COVID crash. Hopefully I've familiarized everyone on Twitter and everyone in Discord with my technical analysis over the months, enough to where they recognize that when I say the COVID 1.618 at 413.75, if I just say COVID 1.618 at this point, you should just have that price point of $413.75 ringing in your head, because I've just hammered it into everyone's skull. I'm going to start putting out tests in the Discord, by the way. I'm going to start testing people on their memory of price action. So it might be a question of, what was the high of 2020? Oh, it was 339.08. Duh, everyone knows that. Okay. What's the 08 3.618? If you don't know what the 08 3.618 is by now, get the fuck out of here. It's 39424. So that's step 3. We have up to the 2.618 extension, just because that's all we need. It's a price point of 534.57. It's undiscovered, and until that is discovered or broken over, the 3.618 isn't relevant to us right now. SPY currently sitting at 38197, by the way. It's about 341, 20 minutes to close on the last day of trading before Christmas and the long weekend. So step 4 will be to find the micro levels between the golden ratio extensions and the levels between the 1 and the 1.618. So what do I mean by the micro levels? I refer to the micro levels, and what I mean by that is the levels between the 0 and the 1. So I get rid of the 0 and the 1, get rid of all the extensions, and these are the micros. So I use the 0.236, the 0.382, the 0.65 and the 0.618, which is the golden pocket, if you don't know by now, and the 0.786. I very rarely have the 0.5 toggled. I really should, though, because that's probably why I have a bad read once in a blue moon. But we're not going to add it right now. So those are your micros. Now, find the micros between the golden ratio extension levels. You go into coordinates, and you're just going to type in the price points of the 2 and the 1. So number 1 price is 534.57, which is the 2.618 from the COVID crash. And then the 1.618 at 413.75 is price point 2, plot point 2. And again, because we have the 2 and the 1.618 extensions here, which are serving as the parameters for our micros, we don't need the plot point 0 or the 1, because that's the 2.618 and 1.618. So we untoggle those and we just leave the micros here. That's what I call these. So those are your levels between the 08, I'm sorry, those are your levels between the 2 and the 1.618 extensions. Now we also need the micro levels between the 1 and the 1.618. So same technique, just plot it anywhere, go to coordinates. Now the price point 1 is now 413.75, and then plot point 2 is the COVID 1, or 33908, the high of 2020. All right, and I always lock the levels so I don't accidentally move them when I'm playing around with the chart. So let's go to the monthly so it's nice and clear. All right, so those are steps 1 through 4. Step 5, dissect the patterns you identified in step 1 and validate/invalidate assumptions based on the observations made during all steps. Use different time frames. Like I said, be surgical. Let me take a sip of water. Okay. All right. So what's next? We're gonna dissect this shit. All right. I'm gonna box up here the micros, because I know when you look at the chart, you're like, what are all these levels? Why is there a 0.786 here? Why is that fucking above the 0.65 here? Why are there 3.65 to 0.618? Why are there 3 golden pockets? I'm going to help you out. All right? This what am I doing? What am I doing? This is the origin price action. So this golden pocket here just so happens to be the breakout point after the COVID crash, of course. This right here is the origin of price action. You have the extensions, the 1 and the 2. Then you have the micros between the 2 and the 1. So we'll drag this box up here. Micros between the 2 and the 1. And then micros between the 1 and the 2. Between the 2 and the 1 isn't that important right now, unless we're analyzing the patterns. So we're going to leave the 1.618 to 1 toggled for now. So you have the micros here. I got alerts going off like crazy. Crossing 0.786 between the 083 0.618 and high of 2020. That is a price point of 38244. I don't even have to look. So what's going on here? Let's toggle the head and shoulders pattern and the inverse head and shoulders pattern. And what can we notice? What can we notice? Or what can we ask ourselves? We can ask ourselves a few things. Is it logical to say that the golden ratio price points, the extensions and the golden pocket, are significant based on your initial observation? So when I look at this chart, first thing I notice is 413.75 is major resistance. It was major support. And it was sort of the midline between two bearish, a bearish and bullish pattern forming. The bearish pattern has been confirmed. Of course, you had the breakdown and continuation of a downtrend after the head and shoulders form. Of course, the inverse head and shoulders that is forming with the resistance at the code of 1.618 at 413.75 is still up in the air. It's hypothetical. It's just a proposed speculative assumption here. So that's the first thing I notice. I also notice, and I'll start highlighting shit with circles, that the COVID origin, or the origin price action, the golden pocket, was a significant breakout point after the bounce from the bottom. Everyone was probably very uncertain here. They must have just turned the printer on, got that shit working. It probably ran out of ink for a second here. Everyone was scared, and then they refilled that bitch, and we went off to the races. So, golden pocket from the origin, in my opinion, significant. Then we have, of course, the code 1.618 at 413.75. Now, if you remember the trend line, right, low of October to the low in June, extended left. Well, look, this price action that this extended trend line crosses occurs at the COVID 1.618 at 413.75. That's interesting. So we'll highlight that. We're just making visual observations here. And then, of course, it's a no-brainer. We have a bounce at the COVID 1.618 here. Breakdown. Rejection. You have that bounce at the golden pocket between the 1.618 and the high of 2020. Then you have what we were able to identify and go short on back then when this pattern was forming, peaking at the Kobe 1.618, 413.75. I identified a head and shoulders formation here, and luckily we were on the right side of this trade then. So that occurs there. And I'm not going to draw a million different circles here, but there are a lot of interesting interactions here on a micro time frame that occur at the golden pocket between the 1.618 and 413.75 and the high of 2020. So another interaction at 413.75, and then of course golden pocket here. We're fighting to get back in there. All right, so those are the observations that I made. How does price action interact with the golden ratio? And we'll add the micros between the 2.618 and the 1.618 here. And although the micro levels here are not a golden ratio per se, right? So it's not the golden pocket, it's 0.236, 0.382, or the 0.786. Theoretically, those levels are also the golden ratio because they're being discovered using two macro golden ratio extensions, right? So the parameters for these levels are the 2.618 and 1.618 extension. So although that says the 0.236, although that says the 0.786, and although there's just the golden pocket here, which is the golden ratio, all of the price points are golden ratio. The origin of the 0.236, the 0.382, and the 0.786 are two golden ratio extensions. So whatever price points that we find using those coordinates, whatever they are, we can also say that that is golden ratio. Peak of the right shoulder on the head and shoulders form 0.382. Head forms nearly at the golden pocket between the 2 and the 1. And then you just have a lot of nice interaction with these price points here. Within the confirmation or disproof points within the pattern itself. So confirmation or disproof points being, like let's say this left shoulder just continued down, just plummeted. This would have been a disproof point in the theoretical pattern, or what we're speculating to be forming. Same thing if the head broke down and the right shoulders continued to plummet. It didn't bounce here. Or if this continued and created a higher high. This would have been a disproof point once that broke the high of the head. But it was a confirmation point. So confirmation point at the 0.382 between the 2.618 and 1.618. So back to the questions we're asking ourselves. Is it logical to say that the golden ratio price points are significant based on your initial observation? The answer is yes, in my opinion. If yes, do the patterns and various confirmation points within the patterns identified in step 1 validate this? I.e., do they occur at or around golden ratio? The answer is yes, my friends. The answer is yes. A little note that I have in the post on Discord is take note of volatility or maybe the behavior of your favorite indicator at these levels. Or maybe you notice some sort of an anomaly in the options flow or while at or around the significant level that coincides with already developed or developing price action. Or maybe Jerome Powell is scheduled to speak or spoken at the significant level. Or maybe someone invaded a country. Or maybe data sets are being released while at or around the significant level. Or maybe we are in a vernal equinox. Whatever floats your fucking boat, kid. So hopefully you can understand that. What else? Some more questions I ask myself. I guess that's pretty much it. We have two patterns, head and shoulders into an inverse head and shoulders. A head and shoulders pattern continues to create a lower low after the breakdown of the neckline. And the inverse is just the inverse of that. Once you break the neckline of the inverse head and shoulders, and you have a continuation of an uptrend, creation of a higher high, or a higher high from the origin of the pattern, which I'm calling like a 442.26 price point, around $440. So the pattern is, or the patterns, I would suggest that they're validated through the golden ratio, and also the golden ratio helps validate the assumption that these patterns are playing out. So let's go to the micro time frame and analyze some smaller time frames so we can validate that further and pay attention to the interaction between price and these levels. So this red dotted line here is the neckline of the head and shoulders formation. You really want to get above there. All right, you had that violent breakdown yesterday to 37477 and immediate recovery. Now this might look like no man's land here. Oh, well, there's no level there. Like, what are you saying? Like, I thought we bounced off golden ratio all the time, and it was important to pay attention to those levels because they usually result in volatile moves to the upside or to the downside. They're usually major swing points. And I thought there was confluence between two separate market events and multiple market events and the golden ratio of those market events. And how is price action interacting with the golden ratio of those separate market events? And can we use those separate market events' golden ratio to identify bounce points? And is there confluence between the two? The answer is yes. Again, I'll reiterate. I did this with a clean slate to refresh and consolidate my vision of current price action a bit before the coming weeks and months. Because even though I have an understanding of my own approach, and I feel comfortable when I say, oh, we're bouncing at the 0.382 between the 08 3.618 and the COVID 1.618. When someone reads that or sees the chart and the 1.618 is above the 3.618, and I'm throwing out all these different numbers, it seems confusing on the surface, but it really isn't. It really isn't. So the reason we bounced here is this was the golden pocket between 08 3.618 at 39424 and the high of 2020, which is a price point we're working with now. The high of 2020 is 33908. So between 39424, and I'll just draw a line here so you understand. Going to coordinates 39424. Everyone should be familiar with 39424. Hammered it into your fucking skull. It's 08 3.618. It is one of the most important price points that remains relevant to this day to our trading. While we're in this range. So let that be that red line. I'm not going to pull the fibs for 08 right now because we're focusing on 2020. We're pretending that's all that matters. But just to show you why it might appear confusing, but it really isn't, this technique that I'm using. 08 3.618 down to the high of 2020. So golden pocket between those two parameters. Coordinates 39424, and then of course high of 2020 33908. We have golden pocket existing at 37493 to 37317. Let me just get rid of everything but the golden pocket. Oh look, beautiful bounce. Beautiful bounce. So GP between the 08 3.618 at 39424 and the high of 2020 is at 37493 to 37317. This price point has remained relevant. I've had it on my chart. It's on my regular SPY chart where I have a ton of different levels from separate market events, and I'm just navigating it using that more advanced technique. But that, if you really think about it, that isn't that confusing. So now, hopefully, when you hear me say, oh, we're at the 0.786 between the 08 3.618 and high of 2020, which is 38244, do you get the gist of it? Do you get how it's just a continuation of interaction in price between the levels of separate market events? It's just a continuous reaction to each other or to itself. And as time goes on, it becomes more intricate. And as technology advances, the frequency, the rate of frequency that we see in the market, how fast information is exchanged, how volatile the markets become, it's I don't know, I'm gonna fucking cut that part out. So that's why we bounced there, okay? It's the golden pocket between the 08 3.618 and high of 2020. You understand? So, that's why I said get out of books. Yes, I was wrong yesterday. Yes, I was expecting GDP to be better than expected, which it was. Yes, I was expecting a continuation of the uptrend. We didn't get it. It's okay. It's okay. I was wrong. The chart wasn't. That happens sometimes. All right? The chart's never wrong. These levels are never wrong. They're always met. The golden ratio is always met. There's always a violent bounce to and from golden ratio. All right? So now that you understand, and hopefully that helps people get acclimated with the more advanced approach that I'm using when I'm just doing my thing intraday and on Twitter, throwing out a billion different levels. It seems confusing, but it's not, as I just showed you. So yeah, that's why we bounced there. And where do you think we're headed? We're back up to, well, we're going back up to, in this case, 38762 to 38523 is the golden pocket between the 1.618 from COVID and the high of 2020, or the 1. Obviously, that was a major rejection point. I wish I had done this on Thursday or Wednesday. I wish I had isolated the COVID crash. I would have seen this and maybe have gone short. So hindsight's always 20/20, but as you can see, once again, the golden ratio is a significant swing point. So that's what we're doing. Hopefully you understand my logic. Just a little bit of an introduction video to my technique. And I say my technique as if these numbers and these levels are mine. Let me tell you something. I'm not being arrogant when I say this. I have not seen anyone, and I've looked. I've searched for this. I have not seen anyone utilize the Fibonacci sequence in such a pure logical way and put this much faith in the golden ratio. There's this idea that the golden ratio is some mystical, esoteric thing, and a lot of people like try to make it magical and like give it something that it isn't, or something that it shouldn't be when using it in the market. All right, this isn't some spiritual bullshit. I'm not trying to summon the fucking god of Sepultura with the golden ratio here. I'm not trying to open up a black hole with my fucking chart All right. It's mathematics. It's fucking ratio. All right. You don't have to make it esoteric, and that's why, like, I heard a Stanford professor speaking about the golden ratio, and specifically on how people try to give it this esoteric thing. He brought up how it's used in the markets, and he basically said he's yet to see any significant use from it, or something that can be validated, or something that isn't just some big reach. Like, oh yeah, golden ratio, here, look, the distance between your eyes and your ears, and the distance between your testicles and her tits and Nancy Pelosi's nipples, it's all golden ratio. Let's relax here, alright? It's ridiculous. People, I truly believe that this is a significant edge to be used during trading. And, yeah. I'm rambling at this point. I apologize. I'm kind of caffeinated now. What do I want to say here, though? We're looking good, guys. This is what I'm saying. I'm saying we're looking fucking good. I'm not going to lie. I'm bullish. I am. I think we need to stay above this descending neckline here, which it does look like we're going to do, from this head and shoulders pattern. And I do think we're forming an inverse head and shoulders reaction from this. I mean, it's almost picture perfect. And the funny thing is, Lousy's been with me since I completed all this. What I did was I looked back from 1873 to present day on SPX, and did all of this through. I just pulled up a list of market events throughout history, and went through each one. I'm talking the Panic of 1873. I'm talking the Great Depression. I'm talking the Eisenhower Recession. I'm talking 97, 98. I'm talking 87. I'm talking the dot-com bubble. All right? I'm talking 56. I'm talking fucking COVID. I'm talking 08. I'm talking 2018. I'm talking 2016. I'm talking micro crashes that were caused by false news articles. I went through everything. And what I found is that there was clear as day confluence between the golden ratio of each separate market event with each other's golden ratio. Does that make sense? Does that make sense? It's true. It's true. So I just showed you, for example, the golden ratio, or the golden pocket between the 08 3.618 and high of 2020. Did it not? This bounce here, what do you think that is? That is also the golden pocket between the 11 and the 10.618 extensions of the Panic of 1873. Isn't that interesting? Not this, up here, like 374-ish. And it's also macro extension levels from other market events. The highest high is the 11.618 extension from the Panic of 1873. The low of COVID, I think, is the 9. We can look at 08, of course, the 3.618. Or, I'm sorry, the 2.618 being the golden pocket here. It's essentially the golden pocket of the COVID crash. Confluence there. The low of COVID is the 08 1.618 extension. Crash of 87. Significant macro extensions serve as major support and resistance levels that are pivotal moments in price action. The Eisenhower recession, 56. Everything, I don't care what it is. Every major identifiable market event has confluence. All right? And that is what I'm trying to show everyone. Now, navigating it all is a separate thing. All right? You can have, let's just say for the sake of this conversation that all of this is relevant, all of this is valid, and the market is moving to and from the golden ratio extensions from the point of origin, 1873, to present day. And it's Benoit Mandelbrot used an analogy in his book of a current in a river. And basically what he said was that some scientists had recorded the frequency of a current in a river for some time, and he wanted to listen to it. And what he found, and view it, he wanted to listen and view it, and they didn't let him at first. But he did some begging, and they finally allowed him to. And what he found was incredible. Although it appeared that there were many different currents, the further you went down the river and listened to the frequency at those distant points, although it appeared that there were many, the closer you got to the point of origin of the current, the more clear it became that it was just one point of origin. So everything starts from its origin, right? If we want to get a little bit more scientific, we think about the universe and the notion that everything started with a Big Bang, and the universe is constantly expanding, as the general consensus is. The point of origin, although the universe is vast and complicated, it came from one singularity, okay? So, if you take a step back, how can that even be, how can that be visualized, or how can that be determined just by looking at the universe? Let's say you had a big map of the universe hanging on a fucking 500-foot wall, just so you could see everything. From that perspective, it is impossible to say, logically, that it all came from this little ball of energy. How? The universe is so complex. How is that possible? It's the same idea here. And all of that will be saved for another video. I have a lot to unwrap that's in my mind, that has been in my mind for quite some time now. What I'll say is this. I'm going to be trading off of this system that I've created, this edge, for the rest of my life. As I find it incredible that I've created an edge for myself in a little less than 2 years, and it blows my mind, even though I don't know shit. Let me just be clear. I'm a rookie, all right? I'm not trying to blow smoke up my ass. But I've graduated from the when Moon, Ken Griffin lied bullshit, hopium people, to someone that is viewing the broader market and analyzing price action on a level that is a bit more advanced in understanding. And I'm proud of myself for that. And I'm trying to share that with my peers and spark new ideas and try to get them out of the cast and the mold that retail seems to be stuck in, of just a linear way of thinking. And unfortunately, I think the leadership of the retail community had dropped the ball as time went on. It was great to start, but I think the educational factor of it all really slipped away, and it became this like screaming match in an echo chamber. So I'm trying to assist others in changing that. There are a few names that I won't mention because they know who they are, and you know who they are. But there are a few, more than a few, but you know what I'm saying. There's a few individuals that have really helped the minds of retards progress in this game of trading. And I'm one of them. I wouldn't be here if I wasn't in Astros Discord to start, I would have probably held my 1,000 or so shares of AMC to this day on my Cash App and never opened up a chart and just relied on information being fed to me by people who for one reason or another shouldn't have been given the validity that they were given. But yeah, I have a lot to unwrap for you guys. If you can understand the basic fundamental approach that I just showed you of finding the golden ratio levels from each separate market event, if we can grasp that simple idea, we can then move forward in future videos and go into a bit more of the intricacies of using levels from two separate market events and understanding the confluence between the two, and why is the golden pocket between the 1.618 from 2020 and the 3.618 from 08 relevant. 40692 to 40632, 40691 to 40632. Very significant price range there. Why is it significant? We can start asking ourselves more investigative questions. Why is the 11.618 extension from the Panic of 1873 nearly perfectly the all-time high? And why is that golden pocket between the 11 and the 10 basically the golden pocket between I'm sorry. The 3.618 from 08 and the high of 2020. And why is the 3.618 from the Great Depression the low of 2022? And I can go on, but it becomes more intricate, and you really have to grasp this fundamental approach before you can ask yourself those questions and explore and investigate the ratios of the entire market and find the confluences, find the consistencies. Because it's very easy to get lost and confuse yourself because you're dealing with numbers, and unfortunately most of our brains, they're not very good at putting pieces of the puzzle together. So, but let me tell you, this fundamental approach is what it is. All right, this fundamental approach is the foundation of everything that I've shown you guys over the months. And I'm still learning. This is all trial and error. And it's trial and error that renders a gain or a loss in a dollar value for me. I'm not just charting, I'm putting my money to work. And if I lose money, I'm learning. And it's the learning aspect is emphasized because fucking losing money sucks. But every time I've lost money, it has been the fault of my own. It's been to the fault of my own. It wasn't the fault of to the fault of this chart or this system. It was to the fault of my own. It was my lack of reading momentum at the particular point, because 9 times out of 10, when I lost money trading off of this proprietary system that I'm using, it was because I missed something, or I was on the wrong side. I can't tell you how many times I've been long or short of 3.618 to 39424, and Powell has just fucked me, and it went the opposite direction. It did move off that level, but I was on the wrong side of it. I've been long and it went, should have gone short. I've been short and should have gone long. Sucks when that happens. Sucks when I lose money, but it's great when I learn from it. And I am learning from it. So we're getting better at reading the momentum to and from these levels. But yeah, how long is this fucking video? 1 hour and 10 minutes. That's crazy. Can't believe I've been talking this long. I just noticed the camera frame has been on the video Luckily, it's transparent, so I do apologize. Please ignore that. I'm not sure I'm going to even edit this down. I know there were some points in this video where I lost my train of thought for a second, but bear with me, guys. I'm freestyling this. Please join the Discord. It's free. I have some amazing tools in there that people use every day. I have a subscription to TradyTix, which is an automated bot service that provides you with many different indicators and tools. So let me pull that up really quickly. Go to the Discord window. Fire Warriors Discord. The link is in my Twitter description. Just click that. Like I said, it's free to join. We have a lot of great people in here. Currently, we have about 125 members, many of which are active every day. We do have a core group in here that is really fucking crushing shit, if I ask myself. Honestly, we're crushing shit. Shout out Chris Champa, friend from home. Shout out Lousy Hero, Little Fib. Shout out Ryan Fantana. He's a newbie, but he's a goodie. Kid's on point. Anyways, TradyTix. We have analyst grades that are updated daily and sometimes throughout the night. Bullseye is really cool. It will give you a possible trade idea. So at 3:56 p.m. today, we had one come in for Nike, for example. It was a put, it was a buy, and premium spent was 65,000, volume 394, open interest 2,544. AI confidence at 60%, and it was for a strike of 118 on Nike put for today expiry. It'll be interesting to see if that hit. But yeah, 60% for a bullseye is pretty good. You had it come in for SQQ. So those are just trade ideas. Then we have stock breakouts. Today at 3 p.m. TGNA momentum 20.14, which is pretty high for TradyTix. Algorithm relative volume 3.68. Resistance level 2073. It's just an alert for potential breakouts in equities. I like TradyFlow a lot too. This is just oh look, VIX came in. Put TradyFlow for VIX. Strike 22, January 18th, 2023. Total of premiums. It'll give you all the information. Total volume, strike to stock difference in percent, and dollar value. Really cool. Had one come in for Meta this morning. Call side. AMC. I don't see many AMC TradyFlow or TradyTix alerts in general, but a put TradyFlow alert came in with a strike of $2. Now, I did say I'll briefly touch on AMC because I know I'm a shill now because I told you the fucking truth from a technical analysis standpoint, of course. I did say if you break down below 485, it's not looking good, and you will likely see 283 in the near term. And with AME, things can move slow or fast. Near term could be like 1 week to 2 months. Long term could be 10 years down to 2 years. Who fucking knows? But it does not look good here. I was honest with you guys. I'm also transparent. I have not had shares in AMC that I've been holding, at least, for about the last 8 months. I've been strictly contracts. I'm playing the volatility. I'm looking for those violent moves to be profitable on contracts, as I did in June. I do pick up 100 or so shares here and there to hold for, a week or two, just in case things do get squeezy. If I see a technical setup, I might pick up some shares here and there and then sell them if we do get a little bit of a move up for a small profit. But I'm not holding shares unless I see the technical setup that I want. I familiarized myself, as you guys know, with this chart for like 2 fucking years. I know it like the back of my hand. I know when to enter and when to exit. That's why I caught the April move. I caught the August move. And right now I'm not in anything. I have no shares and no calls, I'm being honest. I'm not entering puts though. I'm not a put player in Amy. I don't like betting against people like the apes. But it is what it is, guys. You had that Trade Flow AMC. What else? You have Golden Sweeps coming in hot every day. 3:58 p.m. Call the Golden Sweep. 140 strike for January 17th expiry. It's a leap to 2025. 1.31 million. So a Golden Sweep is just an order of flow that is greater than 1 million in premium spent. And you have sweeps, which can range up to, I guess, 999,000 in premium, right? So sweeps are just a high premium amount, but not golden sweeps, not over 1 million. Scalpers are cool. I don't really use it though. I'm gonna be honest. I don't really use anything like I don't follow the trades to a T. I just use these alerts to get an idea for a trade during the day or see where people are putting their money. And then I determine, based on my own evaluation of the equity or the market for that day, if I want to follow that trade. Insider trades are great. It'll let you know who's selling what or who's buying what. That's on the inside. News. I am not a fan of the TradeEtics news alerts. Like, it's a lot of fucking it's a lot of useless articles that you're probably already aware of that are hitting your timeline on Twitter. But it is what it is. Sometimes something comes in late at night before anyone else gets it out, and it might give you a little bit of an edge ahead of time. Social spikes. I've seen many different renditions of spikes in social media sentiment. So today at 2:34, you had a spike in Google. Sentiment is bearish, bullish here, bullish in TRX. You get it. Dark pool lifeguard, just dark pool prints, baby. Large block trades, dark pool activity, crypto breakouts. If you like trading crypto, if you like going 150x leverage on perpetuals at 3:30 a.m. when you're 12 beers deep, like some of us do on the weekend. I'm just kidding. I've done that like twice. This might be a great channel for you to get some trade ideas. And crypto's fucking crazy because these breakouts, they're usually on point. I check them sometimes. There are some names that I don't recognize. I'm not really that involved in crypto. I know the big names, but I don't know what the fuck H&T is. But you're getting a breakout here at 9:02 a.m. on December 21st. Maybe someone traded that. BingX, use Astro's discount code and receive $100 in your account. Anyways, crypto signals, same deal. Just signals. Now, what is the bread and butter of the TradeEtics system that's integrated into my Discord is the TradeEtics query commands. Now, if you go into the query key, query, you can see here all of the commands that you can use in the intercommand channel. And this is used daily by myself and our members, and comes in really handy when you want to just pull some quick data. So we have options flow commands, TR big flow. TR-big flow will show you the largest 10 options flow orders for the day. Flow summary will show you the summary statistics of options flow for the given ticker. Algo flow shows you the top 10 recent algo flow divergences. The second parameter is optional. Blah blah blah. Stock research commands. TR all shows you a summary of TradeEtics AI predictions for the stock. I like to use the where is it? Where's the gex? Miscellaneous commands. So TR hot C will show you the hottest call and put chains for the day. TR gex will show you, or followed by the symbol. Of course, you have to plug in the symbol here after the command. Will show you gamma exposure per each strike and expiration for the symbol. So I constantly pull that when analyzing S&P intraday, and I pay attention to where we're at in price and what the gamma levels of those strikes are, whether there's a spike in negative or positive gamma exposure at the strike that we are at during the day. That's a great tool to use intraday. And this is just, it's basically an inter-command system for the data that is available on Tradietics website to premium members, which I use daily as well. The dashboard on their website is excellent. Body Count loves to pull the net flow. He always watches the net flow. We have a lot of cool tools, guys. So again, things are being added. Please join the Discord. Link in Twitter description. And again, it's free. I'm not asking you to give me money. I want you to make money though, and then maybe one day you decide you want to throw your boy. Well, else you can a little bit of a tip. All right. So this video was entirely too long. It's almost an hour and a half long. And what the? These memes are hilarious. Get in here. This fucking Discord's fun. We're super serious during the day, but we're not afraid to have fun. We make fun of each other. We laugh. We try to keep this game fun. I know there's some Discords in here that are super serious. They think they're fucking Suits on Wall Street. Get the fuck out of here, my guy. All right, we're revolutionizing how we trade. We're revolutionizing the. Is that the word? Revolutionizing the fucking community, kid. All right. We're having fun. We're having a blast. We're making money. We're losing money. But we're making money more than we're losing money. And we're just having a good fucking time. Get in here. I'll catch you in the next video. We'll go over some more intricate ideas of this historical golden ratio roadmap approach that I'm developing. It's incredible. More to show you soon. Peace.